Good afternoon, everybody. I want to say hi to everybody. Welcome back, Jeff Rembaum, partner KBR Legal. Jeff, nice to see you. And also our returning guest panelists, Matt Queasley of the Regional Director of Reserve Advisors, and Nicole Johnson, partner and Director of Operations at Hafer LLC CPAs. Welcome, everybody.
Thank you so much for having us.
Of course. I want to remind our listeners that all panelists are not here to give you specific advice for your association. Rather, they're here to provide their thoughts on what is going to be an exciting topic. I think certainly one that we're all talking about. I think our timing is good. We have just under 1,000 registrants for today's webinar. So I think there are a lot of questions, obviously. As a reminder, this webinar will be condo-centric, addressing only issues of milestone inspections and structural integrity reserve studies. It's very interesting. I call it SIRS. You guys all call it SIRS. And I think that's a tomato, potato thing. And it could be a Canada, US thing, but we're all referring to the same thing. SIRS and SIRS are the same for the purposes of this afternoon. Excuse me. So this will be condo-centric, addressing only the issues of these types of things, and then a roadmap of how to integrate SIRS into your 2025 budget. Thank you to everybody who submitted questions this afternoon. With your registration, we've incorporated many of those topics into the presentation this afternoon. Unfortunately, we will not get to those questions, not dealing specifically with the two matters on the agenda. You can continue to chat in your questions on the topics today that we are discussing. I'll try to work them in. One word of warning, if you chat in your question now and we're going to address it later in the webinar, we're not going to respond to your chat, but be patient. We will get there for sure. And if there's something that is not in the agenda that you want to ask about, we'll get you an email address that you can send those questions to, and we'll distribute them to the participants later on. So we're going to use polling slightly today. So let's start with our first question to see if our webinar participants listen to us about the fact that it's going to be condo versus HOA. So Nez, can you please post question number one, which is what community do you live in? What type of community do you live in? While you're answering that, Mayor Nez is posting that question, I just wanted to take us quickly through the agenda today. So first, we're going to review the current law as it relates to milestone inspections. Then we're going to review the current laws relates to structural integrity reserve studies. And then we're going to get into the meat on the bone here and talk about the integration of SIRS into the 2025 budget process. We're going to look at your reserve study, what you saw in the past and what you're seeing now. We're going to look at how you're going to allocate your existing reserve balances into the SIRS and non-SIRS buckets. We're going to look at determining your required SIRS and non-SIRS funding for your 2025 budget. And then we're going to talk about whether you want to fully fund those SIRS and non-SIRS reserves in 2025. If we have time, and we may not, we'll do some Q&A, but I think we're going to cover most of our intended topics as we work through the agenda. As a matter of interest to those owners, we did get board members, we did get a lot of questions that were seemed to be kind of beginner questions on SIRS. This is more of a level 2 course on SIRS, I think. So if you are at the beginning of this process for your association and you have some questions on SIRS specifically, you can go to www.castlegroup.com. Season 4, episode 10, which was the same, episode 12, which was the same participants as you're seeing this afternoon. We kind of did the first cut through the new SIRS legislation a couple of years ago when it came about. So I would invite you to go and look at those episodes. We will also post the slides from today's episodes on our website under resources, so you have access to them. Boy, that was a lot. Let's show the results of the poll, if you don't mind. And it looks like we've got, as expected, mostly condo owners. It looks like there's 48 participants that really spend their time in the HOA world. So I will remind you again, this is really going to be condo-centric. You're obviously welcome to stay on and listen, but all of what we talk about today will be related to condo associations.
And cooperative, and cooperative, especially.
And co-op. That's exactly right. Thanks, Jeff. Okay, well, let's get started. First item on the agenda is a review of the current law as it relates to milestone inspections. Jeff, can you review the law and what we have to do once we get an inspection?
Give you a very, very brief summary. So within 30 years of the date of the CO, you're going to have your milestone phase 1 visual inspection. If the inspector determines there's cause for a phase 2, then you'll have a phase 2. It's more destructive testing to really get inside of the situation. Once you receive the report, you'll receive a summary. That summary needs to be provided to the membership within 45 days, or at least notice that it is available. And you can use email for those owners who have specifically opted into receiving their official notices via email. Otherwise, you are using a U.S. postage stamp. So that's it in a real quick nutshell.
Okay, and I think it's
and
really
also 25 years, Craig. Excuse me 1 second. For those of you that are approximately located to the coastline, so it would be within the 25 years of the date of the CO. I wanted to toss that in.
I do think this is important that we've seen a number of associations that have it, but haven't completed the process, which is to post it and mail out the summary. So
Right.
I think that's great guidance, Jeff, and we need to make sure we do that because that's half the program is the communication of the issue.
Craig, also, there are individual municipalities and such that have specific requirements mirroring this. So maybe you've had to do it because of local government within the past 5 years. You may be able to avoid having to do it a second time. There are notice requirements. If you do receive notice from your local municipality, et cetera, to provide to the membership as well, you will need to be involving your manager. You will need to be involving your lawyer. And of course, the expert engineer, et cetera, who is helping you with the milestone inspection.
Jeff,
Good.
are they allowed to put it on their website to make it available to the owners?
In fact, they have to, if in fact they're required to have a website.
Okay.
Okay, great. Jeff, let's roll right into SIRS and the current law as it relates to SIRS. I will remind everybody that in the 2024 legislative session, there were no changes regarding the legislation around SIRS and milestone inspections, if I understand correctly. So one change?
Well, a little bit. Publication of the SIRS to the membership within 45 days, similar to what we just discussed for the milestone. You won't find that in the current version of Chapter 718 because it was effective July 1st, and we are all eagerly awaiting for the merged Chapter 718 to come out, laws of Florida. But in the meantime, it was in the bill, and the bill did pass. So within 45 days of receiving that structural integrity reserve study, members have a right to know and posting on the website and that sort of a thing as well. So you're going to do the SIRS at least every 10 years for those condominiums that are 3 stories or higher, with a little bit of a limited exception there. I'm not going to get too much into the nitty gritty today, but if you are a 1, 2, or 3 story condominium, you can check with your lawyer to see if perhaps you don't have to comply with the SIRS requirement. But if you have more than 4 family dwelling in that 1, 2, 3 story building, then you will still have to comply. And it's going to be, remember, the structural integrity reserves are not going to be commingled with other reserves that you may have. And we're going to go into detail on that in a few minutes. We're talking about the roof, the structure, the fireproofing, the plumbing, the electrical, the waterproofing, exterior painting, windows, exterior doors. And this is the one that everybody misses. Any other item with deferred maintenance or replacement costs is going to be greater than $10,000, and the failure to maintain or replace that component has a detrimental effect on any of those aforementioned items I just read off to you. And essentially, people like Matt are going to identify the item, state the useful life of the item, and estimate the replacement cost and deferred maintenance. And because of Matt's mathematical abilities, he's going to be able to take into account the monies you've already saved for some of these components to take into account in the calculations as well.
Jeff, there's a question. Do I have to send my SIRS to the division?
Yes, in fact, within 45 days.
Same 45 days.
Milestone is going in. Go ahead, Matt. Matt wants to say something. Matt, you're muted.
Yeah, you caught yourself. Yeah, the SIRS just get they do want to notice that was sent to the membership, but they don't need a copy.
Right. But the milestone inspection has to be sent to the department?
We'll come back around to that in a minute.
Okay, good. Okay, well, Jeff, thanks a lot. That's very helpful. I think, guys, the bottom line is these deadlines are approaching quickly. The first one The first inspection in SIRS is due December 31st. In most circumstances, December 31st, 2024. So that's the big push. Marinez, will you post poll question number 2, which is, it's a 2-part question. Has your association completed its milestone inspection? And has your association completed its SIRS?
And remember too, that you have to publish the full milestone inspection on the website if you're required to have that website. So
while we're answering that, Matt, I want to turn over to you for a second. How's business? I mean, you're in the reserve getting these reports done business. How are you doing?
It's unbelievable, I think would be the word to describe it. It's incredible, busy. We are actually, we do have all capacity for 2024 report delivery already filled. So we've gotten good adoption from a lot of our customers that were, customers prior to the new laws, and a number of new customers as well coming in line. We've conducted, or we will have conducted, several hundred SIRS by the deadline, but we kind of recognize, and a lot in our industry recognize, that probably not everyone is going to be able to have that done by December 31st, 2024, including many of the calls we're getting each day now, which would like to have us squeeze in, but we just simply don't have the bandwidth.
I think that's an important point, Jeff, and it raises a question. The milestone is December 31st. Matt has no more capacity to take on any new clients at this point. We're hearing the same thing, Matt, from some of your competitors. I'm sure you talk that the capacity industry is almost exhausted at this point. So, Jeff, I want to ask you, from a legal standpoint, even though the deadline, we're going to miss the deadline if you haven't already contracted, what is the best course of action if you've not received a commitment from somebody to get this done in 2024?
Yeah, the bottom line is you need to have the commitment to getting it done. You need to be able to show you're under contract, and at least then you can show that you've done everything you can do to get it timely prepared. And if there simply aren't enough resources, I don't expect anything negative to happen. But if in fact the complaint is made and you haven't taken arrangements to hire someone like Matt to get this done, then I think you're, well, if you can see the fish through the ice, you're on thin ice. I would expect some problems there. Don't be the test case for the division.
We don't see a lot of ice in Florida, but I get the analogy.
I did, being from Canada, I did that for you.
I appreciate that. Okay, let's post the results, because I think it's interesting. A poll question number 2. So it's a 2-parter. Has your association completed its milestone inspection? So of the participants, 30% have not completed them yet. Has your association completed its SIRS? About the same number. I'm going to hope that all of those people who don't have it completed yet have contracted for it. But if you haven't, I think Jeff's guidance is excellent here. You should make sure you have a commitment to have it done, or a contract to have it done in 2025, as soon as the opportunity comes up. So Matt, for those of you who don't have it, you can reach Matt directly at www.reserveadvisors.com and get on his list for 2025. So at least you have a solid argument when someone challenges the fact that you don't have it done. Jeff, is that fair?
Yes, it sure is. And I wanted to also mention, since we're discussing this right now, the Structural Integrity Reserve Study in this year's legislation. Remember, the requirement is also to let the division know within 45 days you've completed your Structural Integrity Reserve Study, and you either provided that copy or made available to the members. You let them know it was available, and you have to provide that to the division of condominium. We're getting some phone calls because people are asking, where's the form? And if there isn't a form published that you can find, then work with your manager, work with your attorney, and if nothing else, send a letter, an email to the division, to a division leader, if you will, letting them know that you have in fact complied. And again, it's about falling back on the requirement to show substantial compliance here. So if they don't have the form ready, but you've already done it and you want to be within the 45 days, it's easy enough to still use a postage stamp and comply.
Because I'm unaware, is the form available at this point? Do we know?
I haven't seen it yet.
I haven't
Okay.
either.
Okay.
No, I've,
But-
I've been told that any day now that they're close to having it ready. And they did provide email address specifically for that purpose. But I can't see if, the statute actually says you have to supply it on the web form. And if the web form's not up, I can't see them citing associations or something if they didn't enter in a form that didn't exist.
Right.
Matt, will you share that? Will you share that email address with us? Because I think
Yeah, I'll
we'll
drop it in the chat. Yeah.
drop it in the chat, and then we'll share it with everybody as we get down, because we're gonna talk a little bit more about the distribution reports in a minute. Okay, well that's good stuff. Let's go back now to the distribution of reports, Jeff, and if you could just, I think you talked about it, the milestone. If just for my purposes, so that I'm a beginner here, for the milestone inspection, you have to distribute, you have to post on your website if you have a website.
Correct. And you're going to put the full copy on the website.
Yep.
You still there? I lost connectivity for a moment. All right, good.
Yep.
You're going to post it on the website. You're going to let the
Yep.
members know the summary is available, or you can even provide to them the actual summary itself.
By either mail or email if they've opted in to accept.
Yes, only if they've opted in to accept. I do every now and then I hear about associations saying, yeah, I used email, even though they haven't even presented the opportunity to the members to opt into using email for official notices, and then that association would not be in compliance.
Okay, and then you have to send a copy of the milestone inspection to the department.
A summary that you did it,
Okay.
right? That you took care of the requirement to provide the notice to the memberships. We can take a look at the exact language of the legislation within, that's the miles. I was going back to the structural integrity on that one, but yes, you need to want to let them know that it is fulfilled.
And then structural integrity, same thing, you post it on your website, the whole report, and you send notification to your membership that it's available within 45 days, same if you have a website, et cetera, et cetera, et cetera.
You're going to distribute a copy of the structural integrity reserve study to the owners that it is completed or that it is available for inspection within 45 days after receiving it. The structural integrity reserve study, you must distribute a copy of the study to each owner or deliver a notice that the completed study is available for inspection. So, and copying, of course. And then that's when you provide the division the notice as well.
Okay. So there's some work to be done once you get it. So I think that's great guidance, everyone. Thank you so much. Let's move on now to the kind of the meat of today's webinar. And I think, Marinez, you've loaded the slide deck. So we just want to kind of take you through this. Now, Nicole, you've been quiet, which is difficult for you, I understand. So we will now engage both you and Matt as we go through kind of the math and the logic of what we're going to do. We have our SIRS. We got it. We're in the throes of our 2025 budget process. So kind of let's go through it. So the first order of business here is your current reserve study. So this is an example of what you would have got before SIRS. And Matt gave me kind of the outline of what components would be addressed. So this is your old reserve study. And I want to just go to the next slide, Marinez, because what you're doing with this old reserve study is you're going to parse it into two buckets of components. One is the SIRS bucket and one is the non-SIRS bucket. So in the new reports, I know Matt's doing and we're seeing in the industry, your new reserve study will show these two buckets of components. Does that make sense to everybody?
Yes, that's correct.
Now, we're getting lots of questions regarding what, the issue of now taking this information and incorporating it into your budget. Nicole, are you hearing the same thing from your clients?
Yes, as always, I'm attending a lot of budget meetings, but as usual, what I'm seeing is the ones that were in the past always getting their studies, they're ahead of it. So they're already getting their budgets. They know what they're doing. It's the ones that were always in the past not doing what they should have been. They're so behind. They don't have the report. What are we going to do for the budget? So it's the first year of this, and it's become very cumbersome for many associations. So I'm glad everybody's on the call today because this is the first year that you have to start doing everything in your budget.
Yeah, good. Okay. And I think, so what we're seeing here is you're going to have the two buckets. Now, most of you would have engaged your reserve specialist or engineer when you did the SIRS, we're hoping you engage them to really have a complete look at your reserves, because this is the point in time. Everything has an inflection point. This is the starting point for a nice, clean, reserve setup. So if you didn't engage your reserve advisor or engineer to do the full bucket, the full package, you really should. You should re-engage them to look at both SIRS and non-reserves, because both of those things are going to be important as we move forward here. Matt, I think you told us earlier, your package includes both mostly.
It does, because keep in mind, condo associations have been since the 80s and are still required to have reserve for roofing, painting, paving, and any other expense over $10,000. So the SIRS was layered onto that existing law. So there's still the obligation, and you can see on the non-SIRS list there's some pretty large elements in there: elevators and air conditioning units and gates and swimming pools. All of those items still are required to be reserved for in your budget, or the budget's required to at least have reserve recommendations for them. The difference being now they have less, they're less strict. They can be waived, those non-SIRS items, but they're still very important to get out to the membership and to disclose to the owners. Generally, when we talk about dollars, we're seeing about 2/3 of the dollars falling into SIRS items and 1/3 into non-SIRS. So it's not as substantial, I think, as some of the big SIRS items, but it's still a really large piece of a lot of associations' financial obligation.
So again, I think for our listeners, this is the time to we're going to really look at reserves, and you're going to get some pushback, especially if you're going to start funding these reserves for the first time. So you want something to fall back on, a professional to say, guys, I'm not making this stuff up. This is what we need. We have a professional telling us what you need. So our recommendation, of course, and I know Nicole and I have talked about this, is get the full package done right now. If you happen to contract with somebody, and we've seen these where you just got a SIRS, it leaves 1/3 of your potential reserve items outstanding. So if you only got that, re-engage, get the full package. That'll give you the starting point. Make sense to everybody? Matt, I do want a couple of questions for you, because you're making up. That's not fair. You are presenting the numbers. You're giving us the numbers, but I know this year you can now deal with inflation. So how are you addressing inflation?
Yeah, so in a couple of ways, and yeah, that's one we kind of make up. No, we look at historical inflation. So most reserve studies are historically done on a 30-year window. The state now says 25 years, but nonetheless, either way, it's a long period of time that we're making projections on. So we've got data going back about 30 years on the construction industry, and historically inflation is a little bit higher than the CPI over the last 30 years. It's roughly around 3.5% for construction materials and labor. And so we're saying, it's a nominal rate. We recognize very recently there's been a spike, so we want to make sure we're first of all starting with real dollars in today's dollars. But no one can say, I don't think, at least on this call, maybe someone has a secret, I don't know, but no one can say what it's actually going to be for the next 30 years. So we put the nominal rate of historical 3.5%, and we run that out on the expenses. We also put a 3.5% escalator on the inflows, so the contributions to the reserve, to create that equity, considering again the assumption that the future costs and future dollars are going to be worth less. Future costs are going to be high in today's dollars.
And are you using a factor for interest on the reserve funds?
Certainly, yes, and that's another one where we're seeing some associations really start to earn some meaningful yield on their savings, and that helps offset the contributions. There again, I think we're moderating a little bit the rate that we've seen over the last year when we project that over the next 30 years, but certainly a good discussion to have with your reserve provider, and make sure you're including some level of interest earnings on those reserves, and talking with your banker, investment advisor, on how to invest those to ensure their safety, but also some yield.
Yeah, I think that's, we kind of recommend, Nicole, I'm sure you do as well, kind of an investment strategy that at all costs protects your funds, right? What's more important, what we always say is what's more important is the return of your funds as opposed to the return on your funds. So Nicole, do you have a comment?
Agreed, and it is taxable.
Yeah,
So that's one of the highlights this year. That is still taxable.
And out of your operating fund, I believe, has to be paid. So.
Yes.
That's
So
a
we wanna
total
make-
scam. That's a
Correct.
total scam on the IRS's part. But anyway, that's a different issue. Matt, so now you've produced the report. All of a sudden, every expert in the community comes out and says we can replace the roof for 60% of that cost. I don't believe you. Are you getting challenges to these numbers? And what is a board to do?
Yeah, and so that we've always kind of gotten that. I think the latest laws and people that haven't gotten reserve studies now are we're probably seeing a little bit more of those challenges. We're getting asked every day to look at someone else's reserve study and say they were off, and can you give us a second opinion on these? I can only encourage boards to engage with their provider, engage with your professionals, to have discussions, because the fact is there probably is some wiggle room on some of the projects. There's different scopes of work that might result in different useful lives, but certainly could adjust costs. So talk to your professionals. We routinely talk with contractors and other engineers that are managing these projects to try to find reasonable costs. We keep a database of what actual associations are paying in actual dollars today, so we're pretty confident in our costs. But there's certainly discussion, and I think if you're not comfortable with the recommendations, you can ask around, but be careful to not put your business judgment rule, and Jeff can maybe expand on that, in jeopardy, because without reliance on professionals, it would be very imprudent for a board to go and change the numbers, or to say we don't believe it, we're gonna reserve for this. I think that really could expose them to some liability if they're not relying on a professional. But if you get if for example we recommend a $200,000 roof project and another engineer says no, that's going to be $175,000, I think you're well within reasonableness to change that number. But without good documentation and good professional information, I'd be hesitant to take that liability on. You just don't get paid enough as a board member to do that, to take that kind of responsibility on. And I say that in
Matt,
jest, of course.
don't you recommend, like, when I talk to my boards about that, go back to the original reserve company and talk to them versus shopping pricing? It's like insurance. When they say we're going to shop agents, they should go back to you and say, okay, can we work on this versus getting a second opinion?
Absolutely. That's exactly the first step, is to go back and say, where did this number come from? What's the basis for the number? What's the scope of work? Can you help us understand why the number is more than we think it is? We often will request historical contracts from associations, and they'll say, well, look, you did this in 2012 and it was only $19,000. How can it possibly be $40,000 this year? And we then are able to say, well, the same scope of work today costs twice as much because of the inflation that's had. Or we find out something new, and we know that we're not perfect, so occasionally we'll make an adjustment. We do, and most firms do offer some level of revision to the report to get it to align and be something. It really has to be something that the board can believe in as well, right? Because if they don't, then they are going to go out and get a second or a third opinion, or keep shopping opinions until they get what they want to hear. But I'm here to tell you, it's not always good news. We've had our reports compared to others, and then they come back to us and say, no, we liked your estimates a lot better than the second opinion that we got.
That's
So
exactly right.
it happens, and it's estimating, it's budgeting. It's not an exact science, but at the same time, it's based. If you're using a qualified firm, it's based in a lot of really recent and accurate data of what's going on in the marketplace.
I think, Nicole, I think your advice is great. If you really have a question, ask. Like, there's no harm in asking. And, Matt and his firm are professionals. They are engaging with clients like any other vendor is. I think the other thing I would warn people is you're looking at a 30-year time horizon, and the concept of materiality kicks in here. Like, is it $10,000 more on a $300,000 roof? It is not going to change your math. So you're looking for real material changes in any particular item before you even really get into that discussion, because again, you're using a set of assumptions. Someone else may use another set of assumptions. But anyway, I think great guidance, guys. Talk to your professional. That's really what we want to do. Okay, let's move on to the second step here, which is probably the most difficult one, which is the allocation of your existing reserve funds. And that's the question we're seeing the most. Can you pull up the next slide, Marinez, I think? Okay, so what we've lined out here is there's a couple of issues here. Number one, if you're using, well, here, let me go through the summary and then we'll go through them one at a time. So there's two basic methodologies of funding reserves. There's the component line item method, and then which allocates, cash to each specific component in the schedule. Then there's those associations that use the pooling method to fund reserves. So they have a bucket of funds. And the bucket of funds issue is more complex, if you will. We're going to go through three kind of strategies, which is the 100-0 strategy. We have an illustration, that minimize future cash flow strategy. And what we're talking about there is most boards are looking to fully fund the reserve, depending on your definition of fully funding, and there's lots, but to fully fund the reserves with the minimum amount of cash they need. That's really where the pooling concept came in. So Matt has got an excellent algorithm that he's going to take us through to kind of hit that sweet spot in terms of allocating what we have. And then we have a hybrid method, which I'll take you through another example. So those are kind of that methodologies or strategies to reserve the funds. Before I jump into the example, Matt and Nicole, anything to add?
I mean, what I'm seeing in a lot of our budgets is most of our associations are already in the pooling method. We've seen a lot in the last couple of years that have already converted their non-SIRS into the pooling method already. So it's a small percentage that's still in the component method.
Right.
It is. And by the way, sorry, Matt, go ahead.
And more, the reason that historically associations have wanted to stay in the component method is because there's worried that there's not enough controls on the pooled method, that the next board is going to go spend all the roofing money on a lobby renovation. Well, guess what? That's not allowed anymore by law. So that fear is mitigated, I think, by these new laws. So I'm consistent with Nicole, seeing many more saying, okay, we can scratch the idea of continuing to restrict the funds by component. Let's get them into the two pools that we're talking about now, and deal with those two controls there.
And in fact, even on the SIRS part, most of them are going to the pooling method on the SIRS.
If you're already in the pooling method, Matt, did you just say there are limitations on what can come out of the pool for a component that needs repair or replacement within the pool? I'm not sure I understood that. Did you say that within the pool, if I needed to use all the money that's in the pool for one component because it came due, can I do that right now? Because I haven't seen anything that prohibits that.
Yeah, no, that's true.
No,
yeah, I didn't.
Okay.
Didn't mean to conflict that if I did. That's exactly right. Yeah, the pool means that the funds are available for any item in
there.
The pool.
All the funds are available for any item in that pool. Correct.
The control that I was talking about was the segregation, like we talked earlier, of the two funds, and funds for structural items cannot be used on anything for non-structural.
Right. Exactly. Right.
Okay, but for those people who are using component funding, can you go to the next slide? Because I'll show you what component funding looks like. If you are using this method, you should talk to your CPA management company, because it is not the recommended strategy, certainly from Castle's standpoint. Nicole, you seem to be in the same bucket. Matt, you're there too. It is a much more robust strategy to have component funding, and it is minimum. It allows you to have all the money you need with a minimum amount of outflow. So I think if you're not doing pooled funding, you should really talk to your experts about that. Having said that, here's an example of a worksheet from a reserve study with component funding. So if you look at this is, again, the general reserve study, and we've highlighted in red the types of items that would move to the SIRS bucket. Because what we're going to end up here, guys, is two buckets of reserve components and a corresponding two buckets of dollars. That's really where we're heading here. So when we're allocating the existing money, if you're on a component basis, and let's look at electrical system for a second, $12,000 of your balance in this example is associated with electrical system. When you create the SIRS bucket, you move $12,000 of the cash. So that's kind of the strategy with respect to component funding. It's a one-to-one relationship with the dollars and the component. They move together. Make sense? Fairly simple. Nicole?
I think one of the negatives too on the component side is that I see associations will have negative reserves because they did use money from another line item because they didn't have it. And that's, from Jeff's standpoint, a legal standpoint, that's a violation because they're not allowed to use that money. So a component, I've seen so many associations have negative balances. Pooled reserves, you won't have that.
Right, exactly. Okay, let's go to the next, reserve, the pooled funding method. So this is kind of the 100-0 method. And guys, what the concept here is, with the new legislation, you lose all flexibility with respect to the waiving or reducing funding for SIRS related components. You maintain flexibility with the owners having the ability to waive or reduce funding. So the concept here is you put all your money where you have the least flexibility, and you maintain flexibility in the other account. So in this particular example, if you look, this association had $985,000 of cash, and they decided that and we're going to comment on how you move the money later and the legal implications. Jeff's like chomping at the bit to get to that, and we will get there. But the reality is this association had $985,000, and this is an example where they put it all in their SIRS reserves, reset the cash funding basis. And this is a straight line. You see it resets at 392, 942 and 372, 985. So that would be an example of the pooled funding 100%, like all in one bucket. It really is an oversimplification of what you can do, but conceptually there's a valid argument for doing that. So that's that one. Let's go to the next example if we can, Marinez. And this is the one I like the best, and this is coming directly from Matt. So Matt, I'm going to have you take us through kind of a strategy, another strategy system. So tell us what you're doing here and then how you get here, and then we can go from there.
Sure. So very similar to where you started an example before. One side is we put 100% of the money into the SIRS bucket initially, and 0% of the money that we have currently in a pool into the non-SIRS. But instead of just running that one scenario, and then maybe you said you flip the scenario and then do a 0 and a 100 and see where it is. That's one way to do it. We, of course, our engineers have taken this one step further and run this optimizer, which runs 100 different scenarios. It says, okay, you got 0 and 100, you got 100 and 0, but then you've also got 50-50, and you've got 99-1, and you've got 98-2, and we run all of these different scenarios and identify which scenario of the split, given the expenses, is going to result in the lowest required annual funding amount, which really tells us, okay, we've got the money optimized for where we put it. So in this example, on the left-hand side, it starts off with 0% of the balance going towards the structural integrity reserves. And the green bar there is the structural integrity contribution then was going to be for the SIRS reserves about 1.8 million. And the general reserves was less. General reserves was, in this case, a couple $100,000, but all of the money that they had existing was going to the general reserve side. So it in essence made those purple bars just a little bit shorter. And then so as we run those contributions again, 5% in 95% and 5% in SIRS, 95% in general, gives us a little bit lower contributions all the way over to the point where we reached, I think it was 87% or 86% of the funds going into structural integrity, and 13% going into general was the lowest combined contribution level. So that was the recommendation in this particular case. There are cases where it doesn't make a real large difference. And I think, Craig, that example that you had where the expenses, all of the expenses in both categories were fairly further out, the initial split of the funds has a lesser impact on the initial contributions in those cases. But when there's a near-term project coming up, that's when we see kind of some of these steeper drop-offs that say, yeah, we've got to leave. In this case, we got to leave a good portion of this money into structural reserves. This is telling me, without looking at anything else, that this community has some structural integrity reserve expenses coming up, and so the funds are going to be needed more near-term than they would be on that general side, because the purple bars don't change that much throughout the different scenarios here, and that tells us that the expenses or the critical point of funding for those general items is further out than the structural items. Not everybody's doing it the same way. This is something that our firm kind of realized early on as a going to be a big question, and some cases it's 100% one or the other. There are cases where it's right in the middle. In this case is just one example we pulled, which is 87 to 13%. Some firms are looking at just saying, okay, what's the total amount of funds or total amount of expenses on each side, and developing that proportionate, dividing the fund proportionately based on the total cost of all the items on that side, but what that on each side, but what that doesn't take into consideration is the timing of those projects. So that's a little bit less optimized, if you will, than looking at the cash flow optimizer. The difficulty, and you mentioned this earlier, when you only look at one side and you only look at the SIRS portion of it, how do you know what you have on the other side? And without that piece of it, you couldn't balance the reserve needs, because you're just looking at one picture. So some associations are looking to put everything into structural integrity, and that's of course going to always minimize the structural integrity portion of the reserves, but it might make the general portion of the reserves much higher, especially if there's something near term on that side.
I think, Matt, this is an excellent model. And I think what the challenge that our boards are having, certainly the ones I'm talking to, is you either have a dartboard to do this and you're speculating a little bit, or you really have a process to go through to figure it out. And this is an excellent process. I really like it. I think most of the goals are to minimize annual funding. That is most of our association's goals. And by the way, have all the money. And I think if I understand this correctly, it would incorporate the hybrid model I'm about to go through, because if you've got near-term expenses and you have to fund them, the model will change. The optimizer will change to make sure the money's in the right SIRS or non-SIRS bucket to get the work done. Is that right?
Correct. Absolutely. Yeah. It's driven by those future expenses and the eventual cash flow based on those the variable being the starting balance in each category.
Yeah. What Matt was describing before, I did run an example yesterday, and it didn't serve my purpose, so I didn't display it for you all. But the reality is putting the 100-0 method. I did an analysis with 100%, the 985 in SIRS and the 0 in non-SIRS, and then I did it the other way: 0 in SIRS, 985 in non-SIRS, and the difference was $10,000 a year on a $300,000 contribution, which suggests the association was properly funding its reserves. And most of the expenses are sometime later in time. So it's not, that's a good example of it didn't have a material impact. There are going to be situations where it does. And I want to just take you through one of those examples, Marinez, if you can go to the next slide. So here's an example of non-SIRS. And what I wanted to point out to you here is this association has some real expenditures in 25 and 26 that they need to fund. So it made sense to put the money in your non-SIRS bucket, so you're not going to be assessed for those items that have to be done and find yourself with no reserves. So this is the science, right? There's an art and a science to this. So what I would suggest that you do, and Matt, correct me if I'm wrong, you need this number to properly do your study, right? To properly complete your analysis. So this is happening with an engagement with your reserve vendor, partner, before they finish everything, because otherwise they're going to make some arbitrary allocation for you. So I think this is really an important, Matt's going to come to the table with the projected needs, and we're going to have to figure out together what you have to do with your existing reserve. Does that make sense?
Yep, absolutely.
Right. Yep. Mm-hmm.
Okay. So let's go to the next slide, Marinez, if you can, because now we're going to talk about, let's go back a step. We have a couple of questions on the last slide. So we have now decided what our monies should be, what two pools we have of funds. And I think before I jump into cash, Nicole, I want to make sure we're all on the same page with respect to whether we can maintain, whether it's two pools of funds. And I think that's an important distinction. Comments?
Yes, absolutely. So we've been talking about this in the CIRA industry for CPAs. You're going to, because they have to be segregated, you're going to have in your equity section the SIRS reserves and your non-SIRS. They must be segregated out. And we believe that you should also have two bank accounts associated with it. So your equity is going to match your cash in each of those SIRS from an accounting perspective.
Nicole, to your point, the legislation says the interest has to be applied to the SIRS. So if you don't have it in separate bank accounts, what a nightmare later to try to unwind and figure out. So I would
Thank you,
definitely
Jeff.
do that.
Exactly.
Yeah.
That's
Right.
exactly why we're recommending that.
We're the same, guys. I think so. You're going to have two separate buckets of reserves, components you're reserving for. And our recommendation is the same as Nicole's. you have two separate bank accounts, one for SIRS cash and one for not. I don't think the legislation, Jeff, requires you to, does it?
It doesn't say it per se, but what it does say is that the interest needs to be applied to the interest on the structural integrity reserve needs to be applied to that reserve. So with that in mind, you can kind of read between the lines to get there.
Yeah, I think that's
part of course of action, and it really come out in the division rules at some point.
Yeah, I think it makes a lot of sense. It's easier to track. By the way, it also gives the association some discipline over the spending of reserve money. If you put it all in one bucket, all of a sudden you have an elevator you have to do, and you do it, and then you realize that you overspent the elevator and you use some of those funds, and that gets messy. And if we've learned nothing else, the department is going to be really prickly on the whole SIRS funding and money. So our recommendation. Go ahead, Nicole.
I think if you don't segregate it out, you're going to have a do to, do from, like exactly what you're bringing up. They're going to use money from SIRS because they're not going to know the segregation out. And that's a violation also. I think it'll be a nightmare in the end if you don't separate it bank accounts.
Yeah, it just makes so much more sense to have it set up that way from the get-go too.
Yeah. So Jeff, what I want to ask you though is now I've got one bucket of funds right now, and I'm now going to parse it out into these two different buckets.
Oh boy.
Do owner vote to do this? Can I just go ahead and move the money? Can I tell Nicole it's all good?
Great question. Am I coming out okay? Because I'm looking at myself here on the video and it's very choppy.
You're delayed, you're choppy, but we can hear you, and you're not following. Your voice is not following, but we can hear you fine.
We can see you.
That sounds good. Before I answer your question, Craig, I want to go back to the notice provisions just to clarify a couple of things. Want to make sure that everybody understood within 45 days of getting your milestone, 45 days of receiving your SIRS, that's going to trigger your notice requirement to the membership. It's also going to trigger for the SIRS the notice requirement to the division. However, the notice requirement to local government about your milestone, well, Matt will have to comply with that because it's the engineer that's going to be letting local government know that. And then if you receive a notice from local government about the need to do the milestone, then you have 14 days to let the members know about that. So that's the short story on notices. Going back now to your question regarding the monies, let's start with the basic premise. If you intend to use reserve monies for a purpose for which they were not intended, excluding SIRS, because we now know that you can only use SIRS for the intended purposes, right? But the non-SIRS bucket, you can only use that money for the intended purpose unless you get a vote of the members. It is a majority of all the membership interests that must approve that. So let's go and take a look at the effect of, let's say they have a pooled reserve this year, and the pool reserve is, for the old reserves, which are the paving, the painting, and the roof, right? Did I get those right? Paving, painting, roof. And let's say the paving is not going to be in the SIRS bucket now. So aren't we then arguably using some of those monies for a purpose that is not initially intended? You have two choices. One, get a vote of the membership. Simple and easy, majority of all. Now you can transfer the monies and the allocation you would like. Or make sure Matt knows when he's running his calculations that you're going to keep that initial bucket the same. That's a choice too. But those monies, somehow Matt can extrapolate the share of monies that should go to the components in the SIRS and perhaps fund up a little bit, knowing that that money is there from last year. I prefer the vote of the membership to actually transfer the monies. It keeps things straighter and easier over time. And remember, after December 31st, 2024, there will be no waiving or reducing of the SIRS. So if you were lucky enough to be able to do that in your budget for budget planning for 2025, you will not be able to do that ever again. I did just hear that there will be a legislator, I think it was Bradley, who is going to be working on yet another big condo bill. So I don't know where this is going to go yet. I haven't heard anything about what's going to be in it, but we know there's problems with the way the legislation is requiring this massive amount of money to be instantly put into these reserves. Wouldn't it be nice if we could have a line of credit to apply to them? And right now we can't do a line of credit. Maybe take a full-blown loan, right, and put that into the reserve and amortize it over a course of years, but you can't do a line of credit. If you want to be able to do these things, if you want to be able to waive and reduce reserves, you have to get in touch with your legislators now. And when I say now, I mean you need to start nagging them. And when I say nag, you want to do like campaigns and get these owner groups that are out there. Hopefully you're listening today, and get word out to your legislators about the harm this could do, right? There's all kinds of horror stories I'm hearing about people that can't afford and people being forced to possibly sell because they just can't afford these requirements. There's got to be a balance drawn between life safety and the need to save these monies. But remember, get with your lawyer. You're going to use the money for a different purpose. That's a vote of the members. It used to be a majority of a quorum. That was changed. It is a majority of all the voting interests that must approve.
Yeah, I think that's good guidance. Get with your attorney. Our advice is do the vote. Just because there's uncertainty around the allocation, you're going to have a new allocation, get everybody to sign off, and that's probably covers everybody's butts. And I think that's kind of the recommendation that we're hearing in the industry.
And Craig, also, I want to point out to everybody listening that if you have a potential purchaser, it is up to the seller to provide a copy of both the milestone and the structural integrity reserve study to the potential buyer. So bear that in mind as well, everybody.
And by the way, for our clients, we're doing that as part of the estoppel process. So they don't, I think that's going to be probably a
benefit from Castle Management.
Yeah. Okay. So I just want to kind of summarize where we are. So we have the study from Matt. We have the two buckets, SIRS and non-SIRS buckets. We've agreed that we can pool within each bucket, but not across both buckets together, right? Pool funds. We have separate bank accounts for reserve for SIRS and non-SIRS.
Definitely.
So yeah, so we've got that. That's where we are right now. So the next order of business is determine what 25's budget looks like. So what I want to talk about here is the concept of fully funded. So what we've done here, what I pulled up here is a sample of what we're recommending your budget looks like. So if you look closely at the reserve section, in prior years, you would have had one line item, pooled reserves. Or if you had component, you'd have all the line items for individual components, but assuming you use pool, you'd have one line item for pooled reserves. And our recommendation, and Nicole, we've pre-talked about this, so Nicole and I are on the same page, that you will have two separate distinct reserve line items in your budget in 25 and forward. One for your SIRS number and one for your non-SIRS number. Nicole, we're agreed on this?
100%. Every budget meeting I'm going to, this is what has to be shown.
Okay. And you are pulling these numbers from Matt's reserve study. The two separate buckets from Matt, one is going to show the fully funded number for SIRS and one the fully funded number for non-SIRS. And I'm going to open up a can of worms here, Matt, but I want you to, if you don't mind, comment on the concept of fully funding reserves and what that means. And you are on mute.
Yeah.
There you
go. Oh boy, that's a great question, Craig. And that's one of the most confusing terms in our industry. In fact, I was on the phone with someone from the division yesterday discussing this term. It has multiple definitions, unfortunately. But in Florida, when we talk about fully funding our reserves, we're really talking about that funding the budget to ensure that when the item is needed, there's going to be sufficient cash flow available for it. The industry, the reserve study industry, which dates back 30 years now or more, has a set of national definitions, which are now international definitions from Community Associations Institute, which calls fully funded reserves as having or achieving 100% of the fully funded balance, which is a much higher threshold than what the state requires. So two different definitions out there. Essentially, what Florida requires, and just use a real simple example, if you've got a 10-year roof and it's $100,000 for simple math, and you're in year 7 of its life, and maybe all the previous board members have waived all the reserves to this point, you've got nothing in the bank as a starting point. So you got 3 years to accumulate the $100,000 for the roof. You're considered to have a fully funded budget, or fully funding your budget in Florida if you set aside $33,334 to make sure that you have enough to fund that roof and just get over the hump in the 3rd year when it's needed. The other definition would essentially say you've got to make up those 7 years, which is not the case and not the requirement in the state.
Yeah, and I think, Matt, you raised a great point, and I think there's some confusion about this concept of fully funded. The reality is, and Meredith, I'm going to ask you to go back to one of the schedules, if you don't mind, because I think there's a good illustration just before Matt's here. Here's a good example. If you look on the non-SIRS funding as an example, the balance of the ending reserve never goes below zero. And that's what that strategy is. In fact, we've had to truncate some of it. It actually goes to zero in 2057, which means you always have enough money to do everything you need to do. And I think that's the concept, right, Matt, is that we're talking about in terms of fully funding. It's not like you got to have $10 million right now because that's the fully funding of your reserve, your roof you got to do in 3 years. So, oh, we lost Jeff, but that's okay.
Yeah, no, that's correct. And the division did clarify like 25 years. You got to have it.
I'm here.
Full for 25 years. So that 2057 negative number that might not even play into the equation because that's more than 25 years from now.
Oh, perfect. Okay, so let's go then, if we can, to let's go back to the budget illustration, if you don't mind, Marinez. Oh, there we go. So this is what your budget's going to look like. You are pulling these numbers right out of your reserves. Now let's go to your options in 25, because there's also some confusion here. So in 25, you have well, let's go back. These are the options. Fully fund your SIRS and non-SIRS reserves. You can do that. That is, most associations who are previously fully funding their reserves will not see a dramatic change in the reserve requirement because you haven't added anything. We've just switched it around a little bit. That's all we're doing. The associations who haven't fully funded reserves are the ones that that are going to see a challenge here, because all of a sudden you have to start funding. You have to start funding reserves, except 25. So your options are fully fund. You can waive or partially fund your non-SIRS reserves. And in 25 only, you could waive or partially fund your SIRS reserves, as long as your budget is adopted in 24 for 25. And I just want to confirm, Jeff, are you that you're there? You're back. I have that right, correct?
I am here. What was that? It was garbly on my side.
I'm sorry, that you have 1 year only to waive your SIRS reserves. And that's if your budget's adopted.
Oh, I don't like the way you express that. I know exactly what you mean. I would rather we say that you can do so until December 31st, 2024. So that as long as you're in your budget planning, you can do it for this year. But I don't want to say you have a year. You don't have a year. You've got a very short window to be able to do so for your 2025 budget.
Yeah, I think I meant that it'll affect your 25-year budget, but that's fair clarification. So you have to have this vote before the end of 24. And by the way, it is an owner vote. This is not a board decision, right? The board in a condo association has to adopt a reserve, a budget with fully funded reserves.
And then if it wants to, and only if it wants to, it can then present to the membership that option to waive or reduce, to which I say you're just prolonging your pain later, right? Matt can probably address that in Nicole better than I can. But if you start even if you take advantage of that for this year, you're just going to have to add it into the remaining years.
I think that's it down the line. That's all you're doing is next year making your budget higher.
Yeah, you are. The only thing I would say, guys, is this is going to be a shock to the system for a lot of associations. And 1 year to explain to the community what this is going to look like is way better than 2 months to explain. And getting people to understand you're going to have to fund these reserves. So the conservative side of me says, put the money in the bank right away. The practical side of me says, the associations that weren't funding reserves for a reason. And to initially make that change without any kind of time frame to absorb it may not be the appropriate strategy. And it's going to be association dependent.
And they have known about this for so long. So I think associations should have been more proactive than waiting till the last minute saying, well, we have another year to do it. They should have been working on this the last couple of years, building it in.
To which I should get to your legislator now, so that in the coming season, in the coming legislation, maybe there can be some relief under some certain circumstances.
We're going over time a couple of minutes, but I did want to post the last poll question because I think it's interesting. Poll question number 3, do you plan to adopt full SIRS funding in 25? And I want to ask Nicole one question before we move on, and that is, if I don't have my SIRS reserve study now, do I wait to get it before I finalize my 25 budget? And I will preface that with, this is a disaster for management companies and CPAs if you decide to wait. So Nicole, do I have to wait? What do I do if I don't have it?
So from an accounting perspective, two things. First of all, you want to make sure it's adopted before December 31st, 2024. So then you can waive or partially fund those SIRS.
Right.
And make sure that if the report's not finished, that at least you have a contract in place, that you've done your fiduciary responsibility as a board member, that something's in place that you're going to get that report in 2025. And what some of my boards are doing is, if they have an old reserve study, they're pulling out from that study SIRS items and using that estimate so they can at least have that on their budget to give to the unit owners what they're actually waiving, so they can present something on there, because our board members are not educated enough to be able to do a SIRS report.
And
So if they haven't done it yet, at least there's an estimate on there of what they're waiving.
Jeff, you had a comment?
Yeah, sure do. And that was great advice from Nicole. Hafer and Company, right? Truly one of the best association CPA firms out there. Matt, the name of your reserve company again is?
Reserve Advisors.
Reserve Advisors, which is just absolutely fantastic. To your point, Nicole, this is something the association that's in this conundrum can talk about with their lawyer. Even though they may not have the SIRS numbers yet, they can only waive or reduce through December 31st. Could they then take a vote saying, regardless of what we're going to pass the budget with the reserves fully funded. Once we get it, we're going to amend the budget, but here's a membership vote opportunity to reduce the structural integrities by 25%, by 30%. Take that vote before December 31st, 2024. Will that pass judicial muster or not? I cannot guarantee, but it is a thinking outside the box, still taking into account all of the legislation. You can discuss that with your association's lawyer.
Excellent point, Jeff. And I always say that the boards need to consult with their attorneys. This is so important. This law is very confusing, even for the professionals, that you need to consult. And Jeff, great law firm, they need to consult with their attorneys. I can't stress that enough to our board members.
I think it's a good point. I do think the fact that you don't have your SIRS doesn't absolve you of the responsibility to put a best estimate of what your reserve requirement is in your budget. And you can, if the number comes back materially different, you can amend your budget if you have to. But I think get with your professionals for sure regarding that. I'm just going to check in on the poll question with respect to the funding of reserves. It looks like the majority of our associations who do have their SIRS are going to fully fund. So I think that's a real positive thing. 16% are going to delay. 30% don't know. That's probably about right. Half and half, right? That probably makes sense in this world. So guys, we are out of time. Thank you so much for your time. I really do appreciate it. I think this is, again, a good topic. If nothing else, it should open up a debate or a dialogue between your property management company, your CPA, and your attorney on what to, and your reserve advisor on what to do. So, Matt, I'm going to thank you and Nicole very much for your time this afternoon. Jeff, always a pleasure. And we'll see you back in another month or so. Take care, everybody.
Thank you, Castle.
Thank you.
Have a good day, everybody.
Take care. Bye-bye.
Thank you.